Good day and welcome to another episode of Analyst Insights, whereby we get to discuss our most topical issues in our capital markets and the economy at large. I'm your host today. My name is Simbiso Musa, and with me here are our analysts Ranga and Rufaro. Welcome.
Thank you for having us, Simbiso.
Thanks for having us, Simbiso. Good day.
Okay, so we'll dive straight into it. I think one of the major issues raised this week was the bloodbath in the banking sector. So I'll start by you, Rufaro. What generally are your views? It seems like the changing dynamics in the banking sector. On one end, we have, I think, the banks making the most money. They're the most profitable in this hyperinflationary environment. And then on the other end, we've got them retrenching in masses. So what are the dynamics at play? Do we really have a banking sector crisis, or it's an issue of a business model and not really on the financial side?
Yeah, I tend to agree with that analysis, that it's not a crisis. I think that the financial sector, not just in Zimbabwe but across the world, is being disrupted by technology. So you'll find that there are lots of models globally where banks are being launched without branches, and it's mobile first. It's all software driven with apps and technology. So I think that the Zimbabwean banks are alive to these developments, and they are innovating and coming up with digital processes that require a smaller physical footprint in terms of branches, and also less human resources. So in as much as the media likes to characterize it as a bloodbath, a bloodbath is a bad thing. What it actually is the banks innovating and taking an advantage of technology to streamline their processes, and reducing headcount is a natural consequence of this. So I think it's a positive development because what it speaks to is our financial services sector keeping up with global trends, and I think that for the people who've been let go, the banks tend to be quite generous in terms of their packages, and people who work in the financial sector tend to be reasonably skilled. So I would imagine that they'll be able to move on and find themselves work elsewhere. I don't know what your view is, Ranga.
Yeah, look, I remember one of the big banks actually, it must be Stanchart, around 2016, they hinted that they were going to reshape the business model from brick and mortar to technology-driven setup, where they would keep maybe just a branch or two in Harare and maybe combining some of the smaller branches. So this was something that was already coming, and given what has happened so far with COVID and the fact that people are now working from home and banking is also now being done mostly online, it looks like it was a smart move, and that must have been some sort of a signal to all the other financial institutions. But I guess you have to understand that the reporting that we see is being driven by sort of a mass media perspective. So it's being driven by maybe trade unions who they're always looking at what's happening in the labor market. So whenever there are some situations where some people have to be let go, they always raise some issues. But I guess the question is what should an organization or organizations do to try and prepare these people for life outside of the work or environment that they are used to. I think I remember last time when we posed that question, the response we got was some of these people were being retrained into personal bankers. So it's no longer just about them being tellers, but being able to provide and to cross-sell other products that are offered by the bank. So look, this is to be expected, and I don't think it's going to end with just the banking sector. It's likely to go into other sectors as well, as technology is actually embedding into most of the sectors.
Interesting. And I think maybe I'll move on to the other topical issue, which was titled Another Bumper Harvest on the Cards. Ranga, would you maybe unpack for us, because something of interest was that the government is looking at raising 20 billion. Do we have to be raising money every year despite it being a bumper harvest? Do we have like or what model are we using, and maybe what should we be working towards? Or I was also thinking with regards to accountability mechanisms, whereby we say this year we used 20 billion and we got back 40 billion and we're reinvesting 20 billion. What are your views with regards to this funding mechanism in our agriculture sector?
So look, it's some positive news to get these early expectations of a good rain season, and because most of our people are reliant on rain-fed agriculture anyway, and it has to be a bigger, maybe the biggest employer if you include all the people in the communal areas who are dependent on peasant agriculture. So to that extent, it's positive. Certainly, there are issues to do with the funding of our farming activities. We can't be having farmers being sort of spoon-fed, if I could put it that way, every year. But I have seen something that is a bit different, where they're trying to channel that funding through financial institutions, some banks that are going to be driving that, as opposed to maybe programs like Command, which used to be there. And to the extent that they're able to collect and maybe create a culture where people are accountable, the farmers themselves, they have to know or to learn this aspect of paying back whenever they are funded or risk losing some of their assets. And yes, I totally agree with you. It's important. I think the funding of agriculture has to be looked at in a 360-degree setup. There must be the funding side, but also want to see the output, so that every year we see if we are making progress or not. It doesn't really make sense to be spending, say, for argument's sake, $50 million worth of inputs and other support for us to get an output which is probably less than that. So I think it's important that you look at it that way. And I think at some point also, some of our farmers, especially the bigger ones, have to be weaned from this whole dependence on public sector financing. But if financing is going to come through banks, financial institutions, I think that is some progress. Yeah, I think that would be my response there.
Yeah, look, I'm an ardent believer in free market capitalism. So I think that yes, maybe it made sense in the formative years post land reform, because a lot of the new farmers needed state support. The banks perhaps were not comfortable advancing them, particularly because they didn't have collateral. But it's been almost 20 years since land reform, and I think that the tenure issue and title issue should have been sorted out to the extent that banks would be comfortable lending to farmers because they have collateral in the form of whether be it a 99-year lease or a title deed, and then the market would sort itself out, because the better farmers over time would acquire more land and expand their operations, and the poorer farmers would go bankrupt and exit the sector. And by now, you would expect that the state's involvement in terms of funding directly or guarantees would be minimal. Their role really would just be a regulator, and the private banking sector would be the major funder. So I think it speaks to us not making as much progress as we ought to have in land reform, that the state is still the biggest funder of farmers. So it's certainly something that doesn't augur well for the agricultural sector, in my view. And also, we've got to take some of these numbers with a pinch of salt. We had a forecast for 2.7 million tons in the 2019-2020 agricultural season. So far, less than 1 million tons have been delivered to GMB, and it's unlikely that we are going to get to this 2.7 million, and now we are making forecast of 3 million tons. I think those numbers should be taken with a healthy degree of skepticism.
Yeah, I think I may just to add is so whenever planners or policymakers are making a projection, so it means even in terms of the cost outlay is going to be based on that number. So it means the inputs that are going to be availed are going to be based on the 3 million. Yet there is no demonstration that the inputs that were put to produce 2.7 million have been properly accounted for, and we are really making some progress. So that's the only another problem that I have there, that if you we keep on projecting bigger numbers, and then whenever there's a variance, we don't look at where the variance come from. There is a problem that will actually be a drag even on the fiscus, because now the planning and the inputs that are needed and the support to come from Treasury has to be at the level of the 3 million that's being forecasted. And maybe come next year, at best, we'll be having 1.8 or 2 million or that kind of thing. So I think there's need to balance that with accountability.
Then to refer, they're saying that this power cuts impact on the economy. Do we have a number to the extent to which this ZSE issue is really affecting the economy? It seems there's one issue after the other. If it's not the water levels, it's the Wange power station breakdown. But do we have the number to really conceptualize what we're dealing with?
Yeah, look, I think it's a difficult question to the extent that we, firstly, in terms of the utility being transparent about the generation of power and its distribution and its consumption, we don't really have a good handle on that. How much is the manufacturing sector consuming? How much is the agricultural sector consuming? And what are some of the problems? We know that, for example, farmers are not on prepaid meters, and a lot of them are in arrears in terms of their bills. So some of the funding problems are because you have this huge bad debtors book. So I think what we're seeing now with this announcement of 8-hour power cuts, at a macroeconomic level, it's a net negative, because it means that businesses have to spend on diesel for generators, or have some downtime in their production. And again, because there isn't much transparency, we can't actually forecast with any kind of conviction what this will mean. Because if you speak to people out there doing business, they don't know the schedule that's announced, and what happens on the ground in terms of actual power cuts is often chalk and cheese. So I think what we need is significant reform in the energy sector as a whole, so that we have alternatives from the private sector that people can rely on. I think a good analogy would be what happened with telecoms. So before Econet, it was a nightmare trying to get a fixed line, and a lot of people simply didn't have access to telecoms. And then Econet arrived, and now we have more than 100% penetration. Everybody has access. And I think that the same sort of liberalization needs to happen in the energy sector. And then whether or not the state utility is working doesn't matter so much, because we have private sector alternatives.
Yeah, I think my response there will be, I think if you look at the amount of investment that households and businesses have made, it just tells you that, what you see in terms of the crisis with ZSE is actually understated, because part of that is actually alleviated, or it's offset by the fact that some businesses now are on solar and others are using generators. And you just ask yourself that, try to see how much was actually spent. If one was to do a research and say, if you aggregate the spending on alternative energy, how much has been spent, I think you could come up with a figure that would amount to a new power station or power generation facility. And this is all in the private sector hands. So why do we still keep this scenario where electricity is deemed to be so important that it has to be controlled and be run by a parastatal, when individuals and businesses on their own, they've actually have probably invested more than what ZES has put in the last 10 to 20 years. I think there's clear evidence that power can be actually privatized. If it can be privatized at household and corporate level, surely it can be done where you can bring in investors and be able to look for alternatives maybe to what is there. The problem is these are not like planned routine maintenance. These are like breakdown in equipment, and this is like very old equipment that is failing. So I think there's that need for us to ask ourselves that is it not the right time to actually liberalize electricity generation and everything. I know there are independent power producers and etc. But do you need a power utility in the equation given how they have failed so far?
Sure. So maybe to just wrap it up, I would want each one of you to just state what it would take to get foreign investors coming back to the Zimbabwe Stock Exchange to start buying, because we've seen that foreign selling remains unabated. So maybe you can just state as we close what you think it would take for us to convince foreign investors to come back.
So I think the biggest albatross on the neck of the ZSE from the perspective of foreign investors is exchange control. So the kind of individual sitting in Joburg, London, or New York thinking about investing in a frontier market like Zim are well informed and smart. So they know that fair value for a US dollar is closer to 150 and it's not 85. So if you are asking them to bring money through formal channels at 85, where they know that fair value is almost double that, then you're not going to, they're going to invest elsewhere. So I think that's the first albatross that we need to remove and have an exchange control regime that reflects the fair value of a dollar for these foreigners. As long as there's this issue, you're not going to see foreign investment flows into the ZSE. In fact, the last 18 months, it's been one-way traffic. They're all getting out. So we need to fix that, and then we can stand a chance of attracting portfolio flows.
Yeah, and Ranga?
So issues to do with policy consistency. I think quite a number of these guys came through around 2009 after dollarization or adoption of multiple currency. And I remember the central bank governor at the time were saying there's no way that we're going to go back to the Zim dollar until we have reserves to cover us for the next 3 years and we've achieved certain level of stability, etc. So someone is coming on the back of that. And what happens? The next day, someone introduces a pseudo local currency, and they try and convince you that is a par in terms of its exchangeability to the local currency. That just throws away whatever numbers or the model that someone is working on with. So I think some consistency is also needed in terms of the policy, especially the ones that are affecting the economic well-being of the country. We can't be chopping and changing every time and resorting to issuing some punitive statutory instrument as a way to get people to comply.
All right. So thank you so much, Ranga and Rufaro, and thank you for listening. Until next time, good day.